Hello everyone and welcome to the October edition of the AAA. That's the Ask Anthony Anything session with me, Anthony Trenchev, co-founder and managing partner at Nexo. And it is my great pleasure and privilege to be welcoming today Kalin Metodiev.
Hello everyone.
Who is also a co-founder and managing partner at Nexo and a guy who oversees corporate finance, mergers and acquisitions, a front that has been very active in these past few months. So you will forgive Kalin if he is a little jet lagged, but he is fresh back from Singapore and on a heavy travel schedule. So, you know, this is one of the rarer occasions this past few months that the two of us are in a room together. And despite all the technological advances, I do like a sit down in a physical room with a physical person. I think that adds to the conversation. So thrilled to be talking to you about all things Nexo, what has been happening this past few months. There has been announcement, there has been, excitement on various different fronts. So this promises to truly be a great session. There are some questions from the community. Actually, a lot of questions from the community. Turns out that the last session that we had, Kalin, was, I think, the most popular one that we did. Certainly in the top three, which one would have expected to be with one of the female representatives of Nexo, with Bianca or Elitza, or somebody from the female Nexo team, but turns out it was with you. And without further ado, I think we should kick things off into the serious conversation around some of the questions that the community had. I understand that some of the questions were overlapping, so if you don't hear the precise definition of your questions, do not worry. We'll try and cover all angles as these are important topics. And with that, over to the first question. It comes from Lloyd XZ and asks you, Kalin, so pay attention. May you please confirm that the recent WBTC withdrawal from MakerDAO is just an operational transfer between Nexo accounts and nothing to be worried about?
Thank you, Anthony. And before I answer the question, I would like to open up with a short statement that these are difficult times that we continue seeing in the markets, not only in the digital asset markets, but all around the world. Difficult decisions to be made by all participants. Unfortunately, we predominantly see the color red on our charts and on our computer screens. But it is our firm conviction that, as it has been on numerous occasions in the past, in numerous other market environments, we will prevail. And I'm not talking about Nexo. I'm talking about all investors, all the makeup of our entire community in the blockchain space. We have already proven our resilience on numerous other occasions, and we have the technology and the innovation to drive our advances in the space, in our reformative efforts in the financial sector. And I believe that this will be another episode that in the future, we will emerge stronger from. So, obviously, we're doing our best to support everybody's, presence in the space and possibly growth. As far as my answer to this question is concerned, it is an operational transfer. And guys, please. When you see something like this, before you start forming conclusions and before you start panicking, we're always here for you. Our support teams, we at the leadership level are accessible through various communication channels. Please inquire, don't panic, don't make conclusions. It's a very simple situation. We are a lending company, and as such, as any other lending company in the world, we source funds from the market. This is from our user base, from wholesale institutional liquidity providers. Also we utilize the capabilities provided to us by the DeFi sector. So, in this situation, we had a collateral which was placed on one of the popular DeFi platforms against which a loan was obtained by Nexo as an institution so that we can relend it to a customer of ours. In time, this loan was repaid upon its maturity. Once we repaid the loan, obviously the collateral was withdrawn in the same transaction to save on fees. Those of you who have bothered to continue investigating on the situation, without any doubt, have seen that we have these transactions on a regular basis. They have happened on 10 plus occasions over the year, and without any doubt, I can assure you that they will continue into the future when we see that the cost of funding we can obtain from these platforms is in our greatest interest and for the benefit of the execution of our business model. So, without doubt, as I said, this is something of a repetitive nature, and it's business as usual for Nexo.
Yeah, and then just one sentence to add, you can see that the collateral has gone back from the DeFi protocol into the Nexo wallet and hasn't moved since. So really a non-event, which, probably this being the weekend and being light on news, some people decided to focus on, but, operational transactions as happened in the past and as will continue to happen in the future. All right, so the next question is for me. Regulators from 8 United States filed cease and desist orders against Nexo. How much could this impact Nexo's business? Asks us again, Lloyd ZX. Okay, that's a loaded question, lots to unpack here because, if you're not into the ins and outs of the shifting regulatory framework worldwide and in particular in the United States, and you would be forgiven if you're not. It takes a little bit of explanation, so bear with me. For those who are regulars to these sessions with me and my guests from the company and elsewhere, will know that the earned interest product in the United States, regulators recently have taken an interest into how exactly is it working, how it has historically been working in its early days and to the present. You would also recall that around mid-February 2022, there was something that the industry and the lawyers have termed the BlockFi order, which is essentially the path forward for the earned interest product as envisioned by the Securities and Exchange Commission, that's the SEC, and also guidance as to what companies that have operated in the past several years, when there was less regulatory clarity, what they should be doing for the past activities, and also how they should go about structuring their business going forward. Now, as with these issues, nothing is ever simple. So apart from, having discussions on the federal level, we also have discussions on the state level with the several different state regulators who are asking questions for explanations, you supply data, etc. So it is an ongoing process on two pathways which run simultaneously. Now, the thing is that everybody has their own procedures, their timelines, their internal dynamics, etc. So it isn't an exact science. We have historically always had a very cooperative, very open, very proactive dialogue with federal and state regulators. It's no secret, I have told you this many times. As soon as the BlockFi order was out, we stopped onboarding new clients in the United States, as well as existing clients could only earn on their existing balances, could not top up new funds, because this is exactly what we saw in the order that they wanted BlockFi to do. And until there's legislation or later guidance by the regulators, this is the guidance. You have to abide by it. We were the first, for a long time, the only ones who proactively and voluntarily stepped up and did that. And we have been discussing with the regulators. Now, with this particular, press releases that were published last week, they were a little surprising to us. I cannot hide my surprise. It is because we have been interacting with the regulators and discussing and providing data in a cooperative and timely fashion. So why they decided this is necessary, one could have his own thoughts about it. Regardless of that, last week our law firms, and we always work with the top law firms in the various different jurisdictions where we operate, they have been in contact with the various regulators saying, okay, let's get all of us together and figure it out. You could figure out perhaps a committee or a spokesperson so that we don't have to go state by state figuring out, but rather centralize the conversation around one table. And we can figure this thing out, both for what has happened years ago and what is currently happening and how it will continue to happen. The good news is, in my humble opinion, and I do take a lead sort of at Nexo for all things legal and compliance-wise, is that the regulators want this product to be in the States. They want to have it there. They're not looking to shut it down. They are wary because there were, unfortunately, some bankruptcies in the past few months, and obviously they have to step up for their mandate for investor protection, and then they want everything that's happening to be within their regulatory framework. Now, how exactly this will look, whether this is going to be S1 forms, whether the offering will have to be through a broker dealer, through a bank, whether it could be provided under some of the exemptions, Reg D, Reg A, Reg T, the various different regulatory safe havens. It is being figured out, but as you know, and watching this AMA session, one would think you follow Nexo. We are working on the several fronts simultaneously because we want to be the first out of the gates, delivering a compliant earn product. And quite frankly, me and Kalin, he's like traveling, talking to investors, clients, institutions, and we are stuck in between a rock and a hard place. On the one hand, we have the American retail and institutions asking, why can't we use the earned interest product? On the other side, you have the regulators who are saying, why are Americans using this product? So it's a little bit of a situation where, it is an orderly mess, but we're figuring this out. We're committed to making this work for all of you and your benefit. So rest assured that our team of professionals, both internally, we have close to 40 people in legal and compliance, on top of all the consultants and the law firms that we retain. We working around the clock to make this possible for you, and I'm sure that the results will follow in soon enough. Yeah, I'm not surprised you don't have anything to add after this very short answer of mine. But I think it was important. Sorry if I was throwing in a lot of detail, but this is important. Now, Benny asks us, and again me, there is thought around the Nexo token and statements from state regulators. How do you comment? Well, I sort of touched upon this in some aspects with regards to how generally this unfolds, and it's not a linear process. Even with BlockFi, they were already negotiating and letters were coming out of the regulators. So this is nothing unusual. This is part of the process and part of how regulators deal with it and how they negotiate. Now, in particular with these statements and the Nexo token, there has been a statement that was issued that the net position in Nexo token that Nexo holds is what makes our assets exceed the liabilities. And if you're wondering where the regulator got this data, is the data that we presented them as part of the cooperative approach that we always have to inquiries. So it's no mystery, like we present them that data and we're fully aware of this. They ask for a snapshot of one of the entities of the Nexo Group. So would have they assessed on a snapshot on the group's entirety, and there are over, I think, 20 companies, legal entities within the group, would they had assessed it on the group level, they would have come to the conclusion that assets exceed liabilities, even if you take out the net position of Nexo entirely out, meaning market it zero, at $0 value of Nexo, we still have more assets than liabilities. And this is very important, as well as the fact that the Nexo token, in terms of total assets of the group, the snapshot would have shown that this is less than 10%. So, there was a little bit of nuances here that I think are important for us to clear out. So, on the group level, the snapshot would have shown that the assets exceed liabilities. And with that, I think we have cleared the air on that question, which has been on some people's minds for the past few days. Now, John asks you the following. Are there plans to include a breakdown of assets within the attestation rather than just a total dollar figure? Presumably that is about the Armanino attestation.
Anthony, I'm looking at these the questions here, and I remember back the days of 2018, 2019, when the questions coming to us were directed towards what are you building next? What are your building plans? How is the future going to be brighter for us at Nexo? And I reminisce about these times, and of course I'm saying this jokingly because we understand that these are difficult times and everybody's concerned about security, about preservation of trust for the long term. And this is why we're here in this session and every day working hard at our desks to ensure that the future is secure and bright for us and our clients at Nexo. This is an interesting question, and here, if I may provide a little more clarity for some of our viewers, this refers to the attestation that we have in real time on our website that shows the excess of assets versus liabilities on our platform, which is provided with the kind technological support of our auditing company, and this is, in my opinion, a complex question that demands a complex answer. I believe that Nexo in its existence has always demonstrated that we lead the path for the industry in terms of our technology and also in terms of our transparency. And this was our effort here. So we delivered a solution that hasn't existed not only in our space, it doesn't exist in TradFi, and I'm sure that many traditional market participants would have loved, to have this kind of verification back in 2008. Let's say, when obviously the global financial crisis was, taking over the world. Also in this difficult market right now, on the macroeconomic level, you read the news. There are very, very large investment banks, that have been in existence, for many, many more years, than Nexo, where investors and users are asking themselves the same question. So we present a degree of transparency that doesn't, obviously doesn't exist, anywhere else. So the question here, this question actually asks, whether we intend to increase this transparency. And the answer is absolutely. The more transparency we can provide, that will be helpful to our community, to our users, to decision makers for investment purposes, we would continue increasing this transparency, but making sure that this transparency, first of all, doesn't diminish our competitive edge, because sometimes you have to understand if the industry isn't ready, if the industry isn't mature enough, or if one participant goes many steps ahead of the herd and provides a degree of transparency that might not be beneficial to its investors, to its users, because it just provides too much information about the business model that many of the competitors would love to be able to get their hands on. This is one. Number two, and maybe this is the old school guy in me speaking here. I've been brought up in traditional capital markets with zero involvement of social media in them. What I'm personally struggling, and many conversations that I'm having with TradFi people, is that this degree of transparency and the speed with which it goes through the social media platforms leads to irrational, subjective, and premature decisions on the part of many investors, of many decision makers. So they see something, come through the, social grapevine, and they're panicking right away, and they can make a decision which sometimes it has been influenced on them involuntarily. But please, guys, don't forget, that there's also a lot of, external interest out there, that expects that many of these decisions will be made, at this precise point in time, and to this degree, that, again, to this degree of irrationality. And I think, that we also, I would say the more philosophical part of my answer here would be that we feel, that we also have a fiduciary duty to ensure that we don't endanger our investors, the traders on our platform, Nexo token holders, and our broad community of service users to irrational decisions. So I think that while we commit and will continue increasing the transparency, it needs to be done with the proper degree of duty and responsibility to make sure that this transparency is constructive and beneficial for decision-making purposes.
No, absolutely. Moving on to the next question. It is for you. Insolvency and bankruptcy is what is being said about Nexo. Are you the next Celsius and Voyager? Asks Anonymous.
It's a rather
dramatic, no?
It's a rather harsh question, I have to say, and not so much, because again, I agree with the person who has asked this question that additional clarity and assurance is beneficial in this hazy market environment. But at the same time, it's a little harsh because I believe that we have demonstrated every single day of Nexo's existence that we provide an actual service that is based on our technology and based on a sound business model founded into its risk management protocols, which are uncompromising. So there isn't, a lot of, let's say, subjectivity. We wake up one day and we make a decision that is based on the same type of circumstances in comparison to another day when the same type of circumstances warrant a completely different decision for our service provision. We have been accused over time, that we have also been on our end, harsh in our execution of our risk management protocols, which, basically force our system to issue margin calls and to resort to liquidations of collateral when the collateralization value is not sufficient to warrant the degree of indebtedness that a single one of our borrowers has on the platform. So I think that the short answer here is that insolvency, bankruptcy are nowhere on Nexo's in Nexo's reality, and we believe and we hope, we aspire, we work very hard that we deliver a very strong and sustainable future for our users for many years to come, enriched with a number of additional services and products through integration of technology and disruption of existing services, not only in the scope of services that we have at the moment, but also looking at new industries such as trading, obviously with our Pro and Prime solutions that we recently availed. We're looking into new solutions to the wealth management and asset management industries in the traditional capital markets. So what you would see going forward is sort of a blend between our strong capabilities in the blockchain space, but adding to them more and more traditional services so that people can, actually under one roof on our platform bring and satisfy their banking needs, their commercial banking needs, their let's say stock, trading and their stock portfolio investments. So this is the future for us, and making I would say finding resemblances with these two names or other names in the space is very far from reality, and I think that this is very easily verifiable. You don't have to listen to me and Anthony sharing this with you today. You can easily verify it. When it comes to these two companies in particular, a lot of the documentation came out. It's publicly accessible, through these proceedings in bankruptcy courts. You see that there were exposures to platforms. There's no need for me to mention any names, but let's say, infamous staking platforms where, hundreds of, even billions, were lost, when a certain DPEG took place. You haven't seen Nexos name, and you won't see Nexos name there because we had absolutely no exposure. Also, there was a long list of names to be seen. There were very nice and tidy tables, that showed which blockchain market participants had exposure to, another infamous name, a hedge fund, which attracted a lot of direct and uncollateralized loans to take directional bets on the market. You don't see Nexos name there, and again, this is for a reason, because we have, since day one, provided a long-term sustainable business model for lending, earning interest on our platform. Recently, as I said, the strong addition of our trading capabilities. And for us, risk management is always of utmost importance. This is how we base our decisions and how we will continue making sure that we operate in a responsible way to our investors and our platform users.
Yeah, and these are all facts. This is not something you have to take our word for. You can go, you didn't want to mention name, but I'm going to mention a few names. No exposure to the Terra Luna debacle. Absolutely no lending to Three Arrows Capital on a principal basis. It's not that we had something against them. We were in contact with them, and actually, we have still the documentation where they're asking about collateralized loans, and our risk managers and professionals just plain and simple. No, that's the answer that they give them. In the two names that were mentioned in the question, now bankruptcy filings, you can see the creditors list. Nexo is not on that. These are all facts that on their own just very simply show you that Nexo is a different type of company, it's a different breed. So you cannot be comparing, what on the surface look like a similar offering, because the underpinnings, the legal regulatory infrastructure and the business model are worlds apart. And this is what puts us in a position to be doing buybacks, to be helping out with the path forward for certain companies that are already in the public domain. Some of them we are part of discussions that are still happening behind closed doors. But as time passes by, you see that not only resilience, as Kalin said, but anti-fragility. This is what we are aspiring to thrive even in the difficult markets. And The stress test of the past 2 quarters, I think, speak for themselves. What institutions do you lend to? Can you name them? Okay, let me pull up my list with institutional counterparties, but I understand why this question is interesting and why it is relevant. What I can confirm is that, us being the dominant player that services the retail, we have a lot of retail clients, obviously, across the jurisdictions that we conduct business in. We are one of the sizable and most respected players in the OTC market, in the interbank market for swaps, OTC deals, the whole 9 yards of the offering. So we are on a first name basis with everybody. And why do I think that giving a particular counterparty's name doesn't add value? Is the fundamental difference about the way we go out about conducting our business. You know that we have stringent collateralization criteria, that we never got caught up in the under and uncollateralization game that brought down several players that were well known in the industry. At the end of the day, once we have completed the due diligence in terms of KYC and AML of our counterparties, it comes down to collateral. And we have the collateral, so we do not have to worry about who the particular institutions are, because they have obviously met our criteria. And the third nuance I think here implied in this question is, have you lent out to some of the companies that made headlines, negative headlines in the recent months? And the simple answer is no, we have not. Otherwise you would have seen Nexus name and those of our affiliate companies somewhere in the court documents, in the creditor list, in the bankruptcy proceedings, and that simply doesn't exist. So I think that covers all the angles of that particular question. Kalin, next one's for you, comes from Matteo Caruso. Any updates regarding the Volt acquisition, which I understand your exclusivity expires this week?
Yes, I'll be happy to share. Actually, our exclusivity was meant to expire a couple of days from now. But I'm happy to share with Nexus community and also with Volt's community that this exclusivity has been extended. And please understand, any distressed transaction is not easy. I have been involved in M&A advisory services for years before we established Nexo, and the M&A process by itself is not simple when you have to exercise sufficient due diligence and care to understand the company, to understand its current state, to understand the pain points. And also, last but not least, this is very important, is to map out a way forward. What will be pursued in a combination of the two companies, the two teams going forward? Will there be synergy? Also, will there be, an easy blend behind corporate cultures? So, in a situation where we have a company in distress to which we have rushed to provide assistance, our duty is on a heightened level, because we really need to look through number of entries. We'll have to look through numbers. We have to acquaint ourselves not only with what the current situation is, but what are some of the events that transpired to get us to this stage. There are multiple interviews at the executive level, and throughout this process, again, I would like to underline that because of our strategic involvement here and because of our ability to provide not only a current solution, our goal there is not only to see how we can help those that have suffered recover as much as possible from this transaction, but also to see how we can service them better going forward so that they can potentially recuperate their losses in a quicker fashion. And I'm sure many of you who are viewing this session at the moment and have been active Nexo users for years would remember that in 2020 we came up with something that we called liquidation assistance program at that time, and we were able to come up with a solution for some of our customers which unfortunately had gotten liquidated during the very, very difficult actually day or so. Everything happened very quickly. Yep. In March of 2020 when COVID broke out and obviously the lockdown started. But then many of our customers were able to use this solution and actually come out better in the future in comparison to where they were before this tremendous market erosion and obviously this market capitalization that was erased within a day. So this is no different here. We want to ensure that there is a solution and then that there is a path forward. And I'm happy to say that our conversations at the executive level at Volt have been going very well. We feel that we see this path forward in a very similar in a very similar way. That not only we care about how we can help people recover their losses immediately, we also have a plan for how this can happen over a more extended period of time. And then there is the ultimate plan which allows people to have their balances restored to the largest possible extent on Nexo's platform, where they can find a new home. They can utilize a wider range of services in a protected way, trade, take advantage of our additional service offerings. And as I said, hopefully it's a win-win situation for everybody in the long term.
Yep. Okay, another one for you. First, congrats with the bank stake. How will that impact the growth options for Nexo in the United States?
This is a good question. I like this question, because it helps me remind our viewers once again that Nexo is not satisfied to remain in the spot where it is. So let's say we in 2018, 2019, the last couple of years, we have achieved a leadership position on the provision of a number of services. But I have to assure you that this doesn't provide ultimate satisfaction to us. And one of the simplest things that we can do is just continue working towards the increase of the size of the service and basically just continue growing, let's say, metrics like assets under management, trading volume, and similar over the coming months and years. But we are always interested in pursuing our ultimate goal since day one, which is to provide every single financial service necessary to our clients under one roof. And clearly, having a wallet, being able to execute transactions, borrowing, lending, trading, all of this needs to be complemented by provision of traditional banking services. So people feel that they have on the same platform a combination between their bank account, savings products, trading capabilities, which, as I mentioned, we aim to expand also on traditional markets. So this is obviously one of the steps that we have taken. The US market, as Anthony has pointed out on a number of occasions, and including in this session, is very important to us. and we aspire to provide the best possible service to our US-based customers, but also customers around the world. So we have follow-up steps that we're taking on the commercial banking front. We're working very hard to deliver additional news to you, literally over the coming weeks and months, where you will see us adding additional commercial banking licenses or our visible efforts to acquire bank stakes in commercial banks or full banks around the world that will allow us to have a global coverage of banking services. So this is, as I said, just another step in our diligent pursuit of this strategy.
Yep. Are there any plans to increase the utility of Nexo tokens with, for example, discounted fees on Nexo Pro trading platform fees, like the FTT token or FTX, asks Anonymous? Of course, there always is a plan to add more utility, more use cases, more reasons for people to acquire Nexo tokens, and more benefits to the already existing customer base. So, you know, we're always thinking in that two directions, and it will come under a number of different forms. So, yes, now that Nexo Pro is live for everybody, and by the way, the feedback has been phenomenal in terms of, you know, people are most excited about the aggregation of liquidity because this was truly cutting edge. Yes, everybody has advanced market orders, or a lot of people, well, not that many, but okay, some players have advanced market orders, and we'll be hitting that front even harder. But like the true value proposition, you know, aggregation of liquidity, which up to very recently was accessible only to the top 1% in terms of volume, not necessarily capability, but volumes traders. This now is en masse accessible for everyone. So we will, of course, tie this in with the Nexo token so that you get an even better experience and even greater utility for the Nexo token. But our constant rethinking and reshaping of the Nexonomics and where the value proposition is a dynamic target. It is moving all the time, and we have teams that are working on that, you know, around the clock. This is how we work around Nexo, around the clock. So there are people that are working on the utilities. We will be intertwined with the card, you know, the Nexo MasterCard, as it currently is available to you guys in Europe, very soon to hit the United States. I'm confident we're making good progress there. So, you know, this will, in my opinion, hopefully my opinion will stand the test of time. This will be a game changer for the Nexo token and its utilities, because we've taken all the best practices and then mixed in a little Nexo innovation to provide greater utility in terms of tiers, benefits. You know, there will be, yes, for those who have asked, there's going to be a metal card. So a lot of exciting stuff on the card front and its connection to the Nexo token, on the professional trading capabilities as well, and lots of things that are a few months away, and we'll be announcing you know, during these sessions and other channels. So yeah, obviously working on adding additional Nexo utilities to the Nexo token always.
And I think just one little nuance to add here, because I want to make sure that our message is clear. It's not only, of course, I confirm what Anthony is saying, you know, and we really have to you know, pat our product teams on the back for their constant efforts to find new utilities for the token. And of course, I would also like to you know, express our gratitude to our users and to our community for providing new suggestions to us. Please continue doing that. We will listen to your suggestions, we listen to your recommendations, and whatever we find helpful that can add value to the current utility of the token, we accept and make these changes. But also what I wanted to repeat here is that the utility of the token also is expected to grow with the additional services that we bring to the Nexo platform. So as you know, we aspire and we work hard to bring commercial banking services, wealth management, asset management, bring more and more innovation and technology into these classical services, which, as you can imagine, represent very large component of the global utilization of such services. Clearly, there will be the Nexo token will be firmly involved in the provision of those solutions on our platform. So you better believe it, and look forward to receiving additional utility through the addition and completion of this 360-degree strategic vision that we have shared on many occasions with our viewers and our followers.
And obviously, me and Colin are Nexo token holders as well, so we have every incentive to create value, and I think that's one of the beautiful things of capitalism. You can structure businesses and utilities to an asset, in this particular case, in such a way that interests are aligned, and it's a win-win for everybody. Next question is for me. Do you have distressed or non-paying borrower accounts? No, we do not. We are a lender that requires collateral. Our loans need to be collateralized for us to extend credit. And the model, the by design is such that we cannot have non-performing, defaulting borrowers, and this has historically been part of our approach to be as inclusive a lender as possible. As long as we know who you are, as long as we've conducted AML on your assets, and by the way, so as you know, happening on the background, you wouldn't even know it's happening because of the software solutions that we have perfected this past 5 years for you. You're good to go. You have the collateral, you're good to go. We don't do credit scoring because this is largely not available in a lot of countries in the world. And also, we always put great emphasis on protecting both the people that borrow from us and the people who we borrow from, i.e., in your case, guys, those earning interest. So we have to strike this balancing act, and I think we've done a fine job doing that. So short answer, no, we do not have such borrowers. Next question comes from Chris C. Can you increase the loan-to-value ratio and interest on the Nexo token? Okay, the interest on the Nexo token currently depends on the tier, and the tier are the different loyalty levels that we have and present to our clients, and the top tier right now yields you 12%, which I think is significant. Yes, interest rates have been raising since the Fed tightening, and now you can probably get 2 or 3% on your bank account, but even accounting for that, I think 12% is significant, and it goes back to our fundamentally sound business models. We want to be generating the funds, the revenue that we then pass on to you, and this has to make sense. So it is not as much as decision what me, Colin, or management at Nexo would like the rates to be, but these are determined by the market, by what is available out there and what we can generate as revenue, which we can then pass on to you. So these are market dynamics that to a large degree do not depend on us. So it's not an arbitrary number that we just throw out there, but it has to make economic sense. And then in terms of the loan to value ratio, we always are looking to increase the benefit to our users. We like to originate more loans. We are a lender, so having a larger loan book is beneficial to us, but we want to be mindful of you guys and protect you and not encourage over leverage, because these are volatile markets. Yes, ultimately probably volatility in crypto is in a downward trajectory, but at this latest 2 quarters, it has been intense. So we do not want you to encourage you to take on more risk than is appropriate, and we have to balance this out. And I think that at the current market condition, the loan to value ratios that we offer are justified and justifiable, and when the overall market conditions improve, we'll reassess that on an ongoing basis and continue to provide the best value for you guys.
I think just a quick summary here, because I think, Anthony, we haven't seen a question about LTV on an asset probably for a couple of years, because before that, we made it our mission to explain day in and day out to our customers why it would be counterproductive for them if we were to increase without any concern the LTVs. And remember, for those of you that have been following us, for years, you remember we have been explaining how our Nexo Oracle works, which is essentially, the technology heart of our business, our risk management system, that is based on, working with all the data that is on our platform, doing a lot of statistical analysis, data attributions to make sure that the system arrives at a specific number of what makes sense, in a culmination of different, financial, technological, trading, and various, other attributes. And in the end, a simple answer, and this is what Anthony was alluding to, a simple answer to us is that if we decided to be subjective, especially to our token, I'm sure many platforms out there, if they were in our position, they would say, let's do what is best for the platform. But I think, that this is one of the things, that again differentiates us, and this is goes back to this question, how we're different from everybody else. We are comfortable because of the size of our business and because of our presence around the world to make decisions which sometimes in the short term might be a little counterproductive to our revenue generation, but at the same time in the long term will allow us to create a sustainable business and socially responsible business to a certain extent. We have declined numerous requests, over the years, for people to max out the LTV on their accounts, even due to specific needs over a specific level, because we're saying for us it would be business, but we really don't want to see this person or this group of people, being liquidated because they're carried away, maybe on some sort of an emotion. There's market sentiment, that swings in a particular direction, especially at the highs and the lows of the market. We hope, that part of our mission, part of our presence in this market is also to institute responsible utilization of our financial services, which is going to be, again, beneficial not only to us as a company, but in our overall global community.
Yep. The real-time audit is a great first step to transparency, but are there any plans to get a full audit? Nathaniel Primo. Okay, I'll go first and maybe then you can build on top of that. Well, I like to think that it is not the first step and that we have, executed several steps preceding the real-time audit we did with Armanino, and that we have, followed up on that as well. So, but to me, the greatest test of transparency and resilience has been built out throughout the years. You know, we have time and again managed to, you know, deliver products, services in such a way that are unaffected by the whims of the market. It goes up and down. We continue to deliver in a transparent way, whether it is the way that we conduct the Nexo buybacks. You know, these are the wallets. Tokens are getting locked there. We don't touch them for the designated time periods. You know, inherently everything that is happening on blockchain is on chain, which is a blessing, definitely, but sometimes a curse, because, like, you know, what Kalin was saying, you know, out of the social media frenzy around every little move, sometimes you cannot conduct what's best for your treasury management and optimize a loan, because people are asking, why are you repaying this loan? Well, maybe I want to refinance elsewhere because it's cheaper. You know, it creates a complex situation which, you know, again, we would be okay with if at least everybody was brought to that level. Like, you know, you guys are asking, when are you doing the next step? And it's a great question, and I think we constantly are working, delivering things on that. But, you know, one should also ask the question in reverse: when is everybody else going to have at least that what we already have? You know, whether it's the real-time attestation, whether it is the transparency of communication, whether it is saying no to the easy money when times were good. You know, these are also type of questions that need to be occasionally acknowledged. And I'm not saying this, you know, to get defensive or anything. We're constantly building out things on our transparency, you know, working on licensing with regulators. What do you think stands behind all the procedures that we have successfully completed with and have resulted in 50 different licenses throughout the world? These are the people asking the hard question and leaving no stone unturned in figuring out what is happening and how it is going to happen going forward. So, you know, these are all important things, and I understand why you ask them. But, you know, I, for myself, wish that everybody would step up and come at least to our level.
I fully agree with you, Anthony. And there are, while Anthony was speaking, I glanced over at the question again, and just reminded myself that literally the middle of the sentence, you know, the core of the sentence again covers transparency. And I understand, you know, that the question is coming from the standpoint of, you know, the user on our platform, the token holder on our platform, needing you know, our regular provision of transparency, and we have again witnessed it on many occasions. We have reinforced it today again. But I would like to add here that there is also an additional degree of transparency, which ties with our efforts to become, you know, a much larger and much more successful company than we already are. You're aware, you know, those of us that know us very well are aware that to this point, another differentiating factor for Nexo is that we have never had to resolve to an equity funding round. You know, because our business model has been, you know, sustainable throughout the years. We have been a profitable company, and we have been able to multiply you know, the funds that we have derived from our original token sale and from our operations, you know, to such extent that again, we're, you know, the only company in our lending niche, you know, and one of the very, very few companies, you know, that are known in this space to have grown to this level without any external equity funding. But at the same time, I mentioned to you, you know, we opened up, you know, to these new opportunities, you know, whether it is to help certain companies that are struggling at the moment with not only with funding from us, but also with a strategic layer of services. Also, we have shared that we have our sights set on new challenges, on new industries that we are hungry to disrupt. And for this particular purpose, we will require funding. And for us to obtain this funding at the best possible terms for Nexo as a company and for our constituents, we need to have this degree of transparency. So, a full audit, a set of audited financial statements that we can share on one hand with investors that will help deliver the largest market valuation to our equity through this transparency will allow us to use our equity as an acquisition vehicle in stock-based acquisitions that will allow us to increase our dry powder for synthetic additions of business capabilities to what we already have. This transparency will also allow us to be more communicative and more and fairer to those companies that we approach for investments, for acquisitions, for mergers into our existing business. Because it's one thing, for us to just assign an arbitrary value to our business, to our finances. It's a completely different thing when we have an independent and objective assessment. So absolutely, we are going in this direction for these particular reasons, so that we can grow faster and stronger in comparison to where we are today.
Yep. Okay, shifting gears here, a question for me: when will we see the debit card function? And when will you lower the $500 minimum balance for the physical card? Okay, so two aspects here. The debit card function is being tested right now. As you know, the super innovative part of the Nexo MasterCard, something that both we and MasterCard are quite proud of, is the aspect of, real-time credit extension by means of using the card, and this was world's first, and this cannot be overstated. Now, where it gets technologically interesting is when you have this same card with a on and off button function as either what I just described or as a regular debit card, where you can top up a balance and spend that balance without having to take out a loan. So we want to make sure that this works flawlessly. We have been testing it out for quite a while, and the team has confirmed that we should be rolling the debit card functionality to all Nexo cards in Q1 of 2023, which, with the way the pace of our space, it is in no time. So just around the corner, before you have opened up, shortly after you've opened up the Christmas presents, this new capability of the Nexo card should be live. And then the second aspect with the minimum dollar amount in terms of balance, we're working on a total overhaul of how all of that works. I mentioned earlier that we're going to have metal cards, we're going to have plastic cards, we're going to have different tiers, and they will come with different requirements for physical delivery and access to the perks and benefits. So, good news are coming on the Nexo card front, and without more detail here, I will not ruin a good announcement. Apart from that, I think, Kalin, these were all the questions. We kindly thank you for your participation and your insights. It's always valuable to have you as a sparring partner and just to, learn from you on an ongoing basis. I hope for you guys this has been as informative as certain aspects for myself, even though I'm caught up into this day to day. There are always things that I learn from Kalin. Nexo is a private company, but I think that we are on our way to achieving public company transparency status, you know, something like what Coinbase is required by virtue of being a listed company. Goes back to what Kalin was saying. You know, we are tirelessly executing upon new products and features for you guys. We are very focused on doing everything the right way, the compliant way, the sustainable way from day one. Now we've gotten regulatory clarity on a number of different fronts. I am excited about this. I'm one of those people that gets excited about regulation. But, you know, we're here to stay. We're here for you. We will be committing all 650 people at Nexo, our efforts, our awake hours to delivering for you. So stay tuned. I think good things are coming in the way of Nexo products and services to you. Thank you, guys.
And please, let's not rely only on the Ask Anthony sessions. We're here for you. We welcome suggestions and recommendations. We understand and believe that we can do this with your help. We grow together. We look forward to continue satisfying your demands and expectations. And yes, you know, put trust in what we do, and we look forward to delivering the results.